Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com.
You're listening to Real Estate 360 Live with Ryan Sloper, the trusted name in real estate radio. Join Ryan every Monday at WNEW 1580 AM from 2 to 3 in the afternoon. He'll cover real estate from every angle under the sun. Call Ryan on air at 877-245-2030. That's 877-245-2030. If it's real estate, it's covered.
We're Real Estate 360 Live with Ryan Sloper, the trusted name in real estate radio. Ryan and his guests will cover every angle of real estate, from interest rates to the economy to what's happening in Washington. Anything that affects real estate in our local area. Got credit issues? Call Ryan. Want to refinance at the lowest rates in U.S. history? Call Ryan. You've got questions, Ryan's got answers. Join Ryan Sloper every Monday on the Big Talker 1580 AM from 2 to 3 in the afternoon. Call on air at 877-245-2030. That's 877-245-2030. Or leave your question at www.realestate360live.com. We're waiting for your call, so call them on air now at 877-245-2030. Remember, if it's real estate, it's covered on Real Estate 360 Live with Ryan Sloper.
Hands can do incredible things. This is the sound of 326 hands playing Mozart. This is the sound of 10,942 hands showing appreciation. 64 hands building a house for the homeless. 142 hands swimming a triathlon. 18 hands winning the big game. And this is the sound of 2 hands helping to save a life. It's called hands-only CPR, and it's recommended by the American Heart Association. If an adult suddenly collapses, call 911, then push hard and fast in the center of their chest until help arrives. It's incredibly easy and effective. Hands can do incredible things, but nothing compares to using them to help save a life. Find out more about this latest method of CPR at handsonlycpr.org. A message from the American Heart Association and the Ad Council.
Welcome back, everyone, to Real Estate 360 Live. I'm your host, Ryan Sloper, joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, the show is designed to build the Washington, D.C. Metro's housing and credit markets by giving you guys good free advice. If you ever have any questions, concerns, or real estate needs, the best number to reach out to me is the off-air phone number, which is 877-245-2030. That's 877-245-2030, or you can reach us via the web at realestate360live.com. That's realestate360live.com. On the right-hand side, there's an Ask a Question button. Just click that, put your contact information, and I'll get back to you by the end of today. It was an interesting little story out there. Bernanke actually, it was, I want to say it was last year, but just now the stories are starting to surface that he himself refinanced his mortgage. He got a 30-year fixed mortgage at an interest rate of 4.25%, and this is according to financial disclosure documents that were released. Now, obviously, we don't know what his loan amount is, but if this says anything to me, it's that even Bernanke himself could not time the interest rates perfectly because, as we all know, the interest rates did go lower from there. That he could have had a jumbo loan, which if that was the case, then it's probably about right. Nationwide, the average interest rate for a 30-year fixed mortgage in 2011 was 4.45%. So he did get a little bit below the actual average interest rate for that year. They also had some interesting information on the actual financial assets that Bernanke had that says that he basically showed $1.07 million in total assets, and his investments were pretty much vanilla, consisting largely of annuities and cash and checking and money market accounts, which I find quite interesting. As him, the Fed chairman that has so much information, you would think that he would be more diversified than that. Wouldn't you agree, Louis?
What? I'm looking up. He makes $200,000 a year as the Federal Reserve chairman. I don't know what his job was before. I think he was in academia.
Yeah, they said he made another $150,000 in textbook royalties last year. So he's looking at about $350,000 at a minimum there. And then they showed it was interesting because they showed in stark contrast that some of his other Fed colleagues, like President Richard Fisher, and financial statements that were released for him in 2010 showed that he owned more than 7,000 acres of land. He had $1 million in gold. And
that's interesting.
Yeah, really interesting, right? And even as much as $250,000 in uranium. So I think
the commodities are the direct beneficiary in price.
Yep.
With the Federal Reserve easing of monetary policy, because they create more dollars that chase a relatively fixed supply of commodities like gold, silver, uranium, and so on.
Yeah, and that's why
it actually shows that they're undermining the economy when they do that, because when people buy gold and silver, it's basically saying they don't necessarily trust the value of the dollar withhold the store as a store of wealth.
Yeah, I would actually I'd be very curious to actually see, all the different Fed guys, what their portfolios actually consist of, because I think it really would tell you, where they're thinking the economy's going.
Well, in some respects, it's kind of insider trading.
Yeah.
I kind of respect Bernanke's portfolio. He holds a lot of cash.
Right, so it makes it look like he's not trying to, blatantly take advantage of the type of stuff that's being initiated via, QE1, QE2.
Although he's also in a position to kind of intervene if the money market, he did last time. Remember when the money markets crashed?
Yeah.
He interjected capital. He saved his own portfolio there.
Yeah, if anything, guys, if Ben Bernanke, he's taking advantage of the low interest rate environment as well. I think that kind of tells you, and they've even done numerous of all the different congressmen and stuff like that have taken advantage of the low interest rates. It's a fantastic time to do so. Many people are saying, well, I don't have the equity position to do so. I don't have enough equity to be able to refinance. I've given some options, alternatives out there. If you do have retirement accounts, that you have the ability and capacity to be able to borrow some of that money from retirement accounts or, stock portfolios, wherever it may be, to pay down your loan so that you can take advantage of these interest rates. It might make sense.
Ben does, right? Do like Ben does.
Yeah. If it makes sense to him for this, I would say that for most people it would make sense. Especially,
he's got to realize that at some point his actions are going to cause rates to rise because he's creating lack of faith in the credit of the United States by just issuing mountains of it.
Yep.
At some point they're going to request higher interest rates in order to lend money to the United States. And at that point, it's the story we've been telling all along. You've got that low interest rate loan going during a high interest rate period, a high rate of inflation. Then you basically set your cost at 2012 prices, when in 2015 and 16 the cost of financing are much higher and the cost of everything is much higher.
Yeah, and realistically speaking, Louis, right now, let's just say like interest rates average is around 4% or something like that. In 4 years from now, let's just say they doubled. Let's just say they went from 4 to 8%. That's not not likely from where we are right now. So, things could double relatively fast. Obviously, that's going to put, interest rates are going to put a downward pressure on overall home prices. But even still, it's going to be much more expensive. And for many people out there, then it's going to be the alternative of renting, in which rental prices are probably more than likely going to continue to rise year over year as inflation sets in. As we've seen.
Eventually, Ryan, that's also going to drive the nominal price of the home up as well.
Yes, exactly. Yep. So, I feel like to protect yourself now, if you're able to, it makes sense, especially prior going into these elections. Nobody knows what's going to change from right now till the beginning of next year. A lot can obviously change. But
we're talking about the fiscal cliff, right, where the tax cuts expire, the Social Security tax expires, and automatic spending cuts kick in.
So, basically, there's a lot of uncertainty that's out there.
Of course.
And, with uncertainty, I mean, it's hard to say what's going to happen, what's going to be driving the market, where's the stock market going to be, where, mortgage-backed securities going to be, what is QE3, and how much money did they inject into the markets this time? Are they buying, just strictly mortgage-backed securities or more treasuries? I mean, we don't know all of this, but what we do know as of right now is the Fed, that Wall Street is looking at the Fed and watching their every move. So any major thing that happens that they're not expecting could really shift interest rates up, or down potentially. But there's more room to go up than there is down, like I stated earlier.
Absolutely.
So to take away that risk and locking yourself in now, I think you're definitely putting yourself in a position to win long term.
And you pointed out, Ryan, if they do go much lower, it's going to be even harder to get a loan because banks aren't going to be willing to lend at those lower rates.
Yeah, and we see it all day long. I mean, even though there's, really good interest rates out there, they're really not as low as you would think that they actually should be. You know what I mean? The banks are kind of hedging off some of the gains that they get in the rate market to, take that as profits. Okay, as origination profits. They're not just passing on all the gains to the consumer. Anybody that thinks that is crazy. They need to make money, so with a low interest rate environment, they make more money on the front end. They're front loading with fees and, maybe hedging some of the yield spread premium that they're paid out versus, making it on the long term, which is more important for them you would think, to continue doing more volume, but they're really not. There's really no benefit to them doing more volume at 3 to 4% interest rates. It's just not there. It'll be interesting to see as we progress closer towards the election time and actually what's going to take place at the meeting this week and what language Bernanke crafts at his press conference to kind of maybe.
What's your prediction, Ryan? You think he's going to pull the trigger on QE3 or wait?
I think he's going to wait. I believe you and I are kind of on the same page there. However, I think that if we have another month of like very dismal jobs report, I think they might.
Well, it comes out the same day, and he probably gets it the night before.
That's true. So I would say if probably not at all until after the election. If it is done, I think in October versus September.
He could wait instead of doing it in November till after there's some type of disaster because of the fiscal cliff.
Yeah.
Until January, February.
Yeah, and it's because
do it. There's no two ways about it. They cannot exist without continuing to issue money and buying treasury.
Yeah, we've been talking about this saying kicking the can down the road for a long time, and that's what they inevitably
to a dead end.
Yeah, exactly, to a dead end, and we just don't know where that dead end is. Is it 2013? Is it 2015? 2020?
They keep making the road a little longer.
Yeah, and in the meantime, we have a very low interest rate environment that's being artificially manipulated by the Fed. So if you can take advantage of this, then do so, please. Ben did, like you said, so you should do the same. 877-245-2030. That's 877-245-2030. Coming up on the end of the show, guys, but for those of you out there that are looking to buy real estate and connect with an agent, Louis, where can they go to start their search if they're looking, A, for, maybe just want to find out about their home price, but B, if they're looking for a good agent to work with?
Great loaded question. You can go to homegain.com. You can check out realtors there. You can compare them anonymously. You fill out a profile. You explain what you're looking for in a real estate agent, whether you're buying or selling, and then they'll respond to you, but we'll keep you anonymous, and then you can compare their profiles and select the one that you want when you're ready to talk to them. You can also check out apartments, homes for sale, new homes for sale. We've got a wide array of listings for you to look at, and we've also got a free instant home valuation tool that you can type in your address and get nearby sales, comps, and also an estimate of your home value. So you go to homegain.com. You can also check out our surveys. A lot of information there for you at homegain.com. Thank you very much for having me, Ryan.
Thanks, Louis. Appreciate it. Thank you guys for listening. We'll be back again next Monday from 2 to 3 p.m. If you ever have any questions or concerns in the meantime, the best number to reach me is 877-245-2030. That's 877-245-2030. Have a great week, guys.